Good morning, everybody. All right, so markets held on to their gain yesterday, and now they have room to go higher. And pretty much everything fired on all cylinders to different degrees. What we've been talking about, what would be needed to shift things, dollar going down, interest rates going down. Of course, where do we go from here? Well, we look for different trends. Have they changed? Clearly, on the daily chart, we have patterns that suggest they're going to go higher. Always, well, higher to where? Is there a void? Well, yeah, there is. And so looking at the spiders here, obvious target would be the 200-day moving average. We'll see what happens at 400. There's always going to be a stall at a whole number. And what shouldn't happen? Well, what shouldn't happen, the most obvious thing that shouldn't happen is it shouldn't go all the way back down here in the short term. That's our major support point, the low prior to the higher high. And, coming down below yesterday's low would be less than ideal, but it wouldn't negate what happened yesterday. And I wouldn't even be surprised to see that happen in maybe next week, some type of consolidation. One of the things that I don't hasn't happened would be, well, we had a rally here, and here, but what I haven't seen happen in quite a while is another wide range bar. Now this is, gapped up from a bar on the low. Now, isn't like, it gapped up out of a type of consolidation. It's, I guess, a pro gap, sure, but it's not like it came out of a base that where prices were going sideways after moving up and it was building support. There was a void above. I mean, this thing gapped up from a bar down here, moved up to resistance. You can see the dip a little bit, right? Bullish that they stepped up there and then pushed it higher. So the biggest part of yesterday's gain came on the gap. And then there was this continuation. So unless you were in yesterday long, you got a small part of what's going on, what happened yesterday. Patterns like this, I don't know what kind of trading strategy buys this other than speculation as to, the news coming out. And if this happens, then that, and then you could speculate that, of course, with options or, buying, but biggest bang for your buck would be with options and a big gap like that. And now it continues. So upside reasonable target would be up here at the 200. It doesn't mean it's going straight up there, but would be a big surprise to see if we had another range expansion bar of this size today. I don't think so, but so that would be a surprise to me if that happened. Things that are extended short term. So I think the upside, typically the upside would be limited today, and we'd have some type of consolidation day. It is Friday. And, things have backed off a bit. Looks kind of weird. I gapped up after the close yesterday. Now it's interesting. So a small gap up there and just chopping around here. Yeah, we talked about that yesterday. Bond markets closed. So two things there. You don't have the bond market's influence like it was yesterday, the very positive influence to drive the markets, but you also don't have the potential for its negative influence. Whereas, interest rates started to go up. So kind of both ways, based on yesterday's bullish price action, you would want the bond market to continue its trend, and that would support a bias while the markets could continue to go up today. So we don't have that. The dollar, I assume that's trading. It is trading. Wow. It's all the way down here. My cursor's all the way down here at this major support point. and the markets are not moving that much. So you can see this was the support area we were talking about, and it initially turned here, and the market reversed down, and then yesterday's CPI news, it gaps down, and it basically stabilized, and then as it continued lower, the market rallied again. So now it's down here at this major support point, and the markets are just hanging here. So, and that suggests to me that the markets have kind of shot its bullets for the time being, and well, holiday, what's closed, bond market, consolidation would be reasonable. Having such a substantial move, most of it was on a gap. So we'll see how much things dip. Maybe some things will be out there. We'll see how much they dip. Maybe to buy things on dips. So the bias needs to be. So I drew this line here, and actually looking this morning, I didn't realize this was down here, but I thought, hey, if this will keep coming down here, keep buying. So now, ultimately, I've got this marked where this would be where I would think the dollar goes. Now, as long as short-term interest rates continue to go sideways, or maybe dip a little bit, I think it gets there. But once it gets down to this major support, then we have to look at that as the probability of this short-term party being over, or at least risk is rising for longs, is going to increase dramatically. It doesn't matter whether we're looking at the dollar or IBM or XYZ. This was in an uptrend, major supports down here. It consolidated for a while. It had a failure to move higher. It's moving lower. And the question's always, where would I want to buy this? Where would be the most opportune place to buy this? And that would be down here, during this consolidation. So assuming it does get down there, right? That's our assumption, is that once it gets down here, and you notice the 200-day moving average is down there, we would then start to look for some kind of patterns like this, where it begins to start chopping around on a smaller time frame or breakdown failures. And so this gives us a plan, somewhat in toward the end of the year, but certainly into the next inflation report, into December. So today being the middle of November, the next report coming out the middle of December, theoretically, the bullish coast should be clear, as long as there isn't some type of negative surprise. What would that be? Well, something like what happened to Bitcoin this week. And so we don't have that kind of potential, sometimes people use the word black swan out there, situation, or some type of risk, some unknown possibly. But if we were to see the dollar, ripping back up into this consolidation it broke down from, we would have to begin to change our bias. That would be common sense. But until something like that happens, it's already down here to be a stall point for today, but ultimately would be for it to come down here toward this August low. And that raises the question, well, if the dollar might decline down to the August low, well, might the spiders go back up to the August high? Well, that's yet to be seen, right? This isn't ripping up as the dollar is ripping up, but it's going to hit this 200-day moving average and 400 and whatever. I'm not even getting into open interest and such, but in the area of that 200 and this pivot high is what we would believe to be a short-term target toward this area. European bank failure, if that was to happen, I suppose it would be a pretty negative thing. I mean, would it influence our markets? I would say, who's got money in that bank? If Goldman Sachs has money in that bank and has that kind of exposure, some situation like that. Otherwise, what was that bank? Deutsche Bank, that has gotten decimated over the last several years. Didn't seem to bother the market much, but I mean, they didn't have a failure, but some bad things going on there. So I don't know, Thane. You know, because of all the unknowns, that's why we have stop losses, because we can't know everything, or when that news is going to hit, or if it's going to hit. You know, it might thing. So I mean, look, we set alerts, and this is what keeps us in the game, because while we want to know everything that there is possibly to know, it's impossible. But that's the way we see things, because ultimately we want to have zero risk. That's human nature. It doesn't work that way. So, the only thing that we can do to gives ourselves peace of mind, first of all, is to accept that we don't know everything, and then put in our stop loss, and then hope it doesn't get hit and things keep going our way. And that's, the concept of bar by bar analysis. It's like, okay, things look great, just like we're talking about here. And what would change my opinion initially? Well, what if today, the spiders were gapping down below today's low? Well, that's not happening. So, that initial thought of what would change my mind, it's not anything to be concerned about right now. Mike is saying maybe Biden would croak. Well, some of us might say that could be a good thing, but the other part is who's going to take over, and that would be scary. So yeah, it could be, but look, yeah, I mean, look, we don't know. So the idea is, look, as traders, investors, self-directed traders, as we like to say, look, you can give yourself brain damage trying to figure out every damn possibility of what could be. But ultimately, the only assurance you have of not losing all your money is a stop loss. So that's all it is. So, the Bitcoin scenario, we talked about this. I talked about this being such a bullish pattern, and, it was bottoming, and the big bar up, and this wide bar, and this bottoming tail bar. And then this news comes out. So where would our stop be? Well, under this wide range bar, this low right here. And so while it would be terrible to have been stopped out, look at how it saved you. It saved you huge. So, and you could say, well, what the hell happened? Well, you could say, thank God I had my stop in, right? My technology, my method saved the day. And this ultimately looks like it's going lower. I mean, I would guess, just looking, at the monthly chart, as we do, just looking to the left, it looks like it's going to come down here, because that's where the major support is. That's where I would look at it as saying, hey, whatever's going on here with Bitcoin, I think some kind of stabilization pattern like this down here would be an opportunity. And this could be, as much as everything looks bullish here, if Bitcoin did start to crater, down to that level, there's, of course, a lot of institutions that have a lot of money in this. And, how would that affect things? Do you use stop loss as capital protection or trade pattern failure? I think that's one and the same, what you're asking me. Well, ultimate stop losses for capital protection, of course, or a trade pattern. It's one of the same. I don't know what pattern would fail. If you asked me on this day, without having any knowledge of news, and you said to me, Greg, what is the probability of this pattern failing? And I would say there's that possibility there, but I don't think it's a good probability. And on this day, you'd be saying, Greg, what the hell? You said it was a low probability. I'll say, yeah, but this is where your stop loss was. So thank you very much for talking to me about stop losses. Well, I mean, that's why I brought this up as a prime example. We don't know everything. And look, we talk about your path, becoming a trader, an investor in technical analysis. And I know what mine was at the beginning. If I know everything there possibly could be about charts and technical analysis and indicators and so on and so forth, I wouldn't lose money or very little money. Yeah, right. Look, this is your guarantee to preservation, stop loss. That's all it is. All right, we look at these patterns, we assume pattern recognition is going to follow through, and there's no guarantee. The guarantee that you trade tomorrow is your stop loss and money management. All right, let's continue. I'm talking too long here. All right, so S&P's giant bar started down here, rallied up. It's got room to go up. Next area of overhead resistance. Major support. Do not go all the way down here. You can go here. You can go here. Don't go down here. Right. Coming down halfway. That's kind of our just spitballing where it shouldn't go. But look, it's on what we call minor support, which is subjective. But, you know, many times we've talked about these voids, and it's got to build support. And so this is going to retrace. This dog is going to retrace, and that's a good thing. It's going to be buying opportunity as long as it doesn't crash down here. So SPX today. I don't know where prices are at from what I wrote this morning, but and the damn people, they zero this out. I don't know why. I got it whatever the time, but I had written down 40.55. 40.55, which there's nothing up here, but to go up to 40.55 today after this gap up yesterday, and you know, it's 50, and I'm sorry I can't look at where they are right now, but and 37.90 had premium, which should be a no-brainer. It's always, you know, you can wait a few minutes and see which way things might swing in the first 10 minutes or so, but look, in no way, shape, or form should the S&P SPX go below today's low. It just shouldn't. It might come down at 3,900. There could be some selling, which should be a buying opportunity with an appropriate pattern, something like this. But in no way, shape, or form. So, you know, 37.90 down here, it should be a no-brainer. Okay? And just because it's a wide range bar and it gapped up, you know, a condor could be viable idea today. DB Puck asking me about UUP. What I see here, right, based on this gray area is pre-market, and you can see my cursor, it's right down here. That's the September low. Ultimately, I would think it's coming down here. All right. Q's already at resistance. Again, look at your quotes. I've written down 40.55 and 37.90. Qs are backing off from these pivots. It's underperformed, but the underperformer has the greatest potential for gain. So as we look at these charts, and you know where the Dow is at, right? I look at the Dow and I was like, I don't want any part of that. Right? This thing's made this move. It's coming up toward this prior high here. You know, it led the way up. Now what we're looking for is catch up. Right? We're looking for this to catch up. Right? It'll still ultimately probably underperform, you know, for the year, but between now and the middle of December, I think it'll outperform. Let me type in here, so. All right. Russell, I got to speed it up here, guys. It's already through the 200-day. It's got void to go. So looks like things are pretty much firing on all cylinders. Got a nice little retest pattern here. Resistance up, up there. We'll see what happens step by step. And Bitcoin, we looked. Dollar, we looked. 10-year, right? Part of the plan. Know where the prior low is, know where this area of support is. So if the dollar continues down to the August low, this, I think, makes a higher low, and then we watch the same kind of pattern. So it doesn't matter the time frame, but you see this weekly chart, if we just took this kind of a pattern and saw that down here, or on an hourly chart in one of these locations, right, we would be looking for this to turn and stabilize, the dollar to turn and stabilize. And if that happens, unless the markets rally back up to new highs or close to them, resumption of the bear market trend. And, silver and, up here, the dollar collapsed. Surprised it didn't do better. But, as long as the dollar's weak, having a bullish bias on gold and silver makes sense. And, crude oil not doing much of anything. So all yours, Dan. Starbucks was a good performer. SBUX. That got killed. So moving average clustered, breaking out. If you get the 20 MA, looks like should continue to go up. It should be a stock that continues to do well into the middle of next month.
Good morning. Yeah, we actually had short 88 puts in Starbucks. So we were bullish yesterday. I'm glad we're not, gapping up. We had an end of day rally and then gapping up. I was like, shoot, that's probably going to kill it for the, day, or at least the morning, but coming in a little bit. So that's good. I hate chasing. I was hoping for an inside bar, and then Monday would be 1, 2, 3 haven, but markets don't care what I want. That's always, but we added a couple long positions, a bunch of make it out of the money puts. So all our opens are fine. Triple M. Yeah. Looks like it's headed to the 200. Let's just time it with the market. All right, let's see what I got here. Earnings and a couple other things. All right, tech, I just saw gapping up here. This 30-minute high is an idea. Valet gapping up here also. Right there, gapping right to resistance. 30-minute high looks good. So 1, 2, 3 on the weekly with a big void. Wow, that thing can go to maybe 16. PSNY gapping up 5 and change, bottoming pattern. Just keep an eye on that. Boeing gapping down here. This is a candidate for a 0 DTE call spread, the 180, or just naked 180s, whatever. So that today's 0 DTE day, Friday, actually. So that's a candidate. Snall, I just saw this thing going by the ticker. I'm like, what the heck is that? IPO yesterday. Gapping up here, no pattern, but I like watching IPOs. Ring, I want to see if I can get a 1 or 2 inside bars here. I like the monthly is cooked. Monthly Climo just killed. Intel had a bullish close. And it got a double downgrade. I don't know by who. I just heard that on the news. Double downgrade. And now, if this goes sideways, that's a breakout failure. Head and shoulders. Price void looks lower. But he's been lagging for years. AMD closing breakout. I said let's try to sell the 63 puts. Plug, potential bottoming pattern. You'll have to watch it a couple days. Whiskey Bravo, deep retracement, little buy setup, gapping up. That's 30-minute high idea. Frey gap breakout 14. There's another 30-minute high. I personally don't like charts that have overlapping bars like this, but if it's a gap breakout from this big W bottom, it would be a no-brainer put spread or naked $13 puts or whatever. Come back to it. Mature here, $3 stock. I gave up its morning gains. I thought this was gapping up. We'll come back to you. DTE. I love this close, and I think it'll go through this 50, so that doesn't bother me. That's, that's bullish consolidation with a closing range expansion breakout. $2 stock opening flat. I mean, look, it's $2. It's bullish consolidation, but look at these tails. It just can't get off the ground. MCW gapping up to 9.25. No, it's not gapping up. My bad. That's yesterday's close. All right, I don't know what this is doing with bottoming pattern. Beezer. It was more flattish this morning, and I said we could buy over yesterday's high, but now the gap's a little too big. Let's watch that on a pullback. HIW. We're already in this one. We bought this into the close yesterday. Looks great. Now, so this is the type of new setup that I'm interested in. Just like that triple M you mentioned. AQN had earnings. I did post this as a long over yesterday's high until I saw the gap down, then I canceled it. Oh, this is when I saw a gap up, not law. So this one, the gap's too big. Hypothetically, let's say it was just gapping at $10, then I would say you could buy 5, 10, 15-minute high, target the 200, but now it's gapping too big for me. AGTI looks like a big mess. You're gone. MCW we already looked at. Duolingo, it's gapping down a little bit, but if it can get back up here, then this is a beautiful put spread. It's a sloppy bottom, but it has to get over yesterday's high. Let me set an alarm at about 84.50. Oh, I got filled on something pre-market. I had a pre-market alarm. Pre-market order to sell some of something we were in yesterday afternoon. All right, server up alarm. We're in that in our ETF trader. So that's a nice little bottoming pattern, gap breakout. All right, Duolingo's not doing it. That's tanking, so it's totally off the radar now. Docs had a big excessive gap. That's a big old gap from a bottoming pattern, but I'm not going to babysit it. Flow is strong. That's consolidate. That's building support over time, not retracing, and then a closing range expansion breakout. Bullish weekly, monthly. That's strong as can be. EDR, big mess, you're gone. Tasked. Gap's too big, I'm pulling in, no interest. Baidu was on my list from yesterday, these, these beat up Chinese stocks. Bottoming pattern here, CTLT. Oh, here's our VFC. Oh, that's what I got filled on some pre-market. I had an order out at 345.